The Federal Reserve just released their July 2024 press statement, and in that press statement, they made a few very small, very subtle changes to just a couple of words, but those very small, very subtle changes could have a huge impact on the entire economy. We're talking all about it in today's video. Hey everyone, welcome back. I am the part-time economist, and in today's video, we are talking all about the most recent Federal Reserve press release. Specifically, I'm going to be pointing out some of the differences between the July press release and the June press release that shows how the Federal Reserve is starting to think differently about the U.S. economy. Now, I'll put the bottom line up front. This is all just my opinion. It's not financial advice, but I think this press release shows that the Federal Reserve is starting to kind of back off of its fight against inflation and start to think about maybe other accommodative forms of monetary policy. So I don't think we are going to get interest rate cuts right away, but I think this press release definitely shows that we are on the track towards lower interest rates in the future. So again, that's just my opinion. That's my speculation. But now I want to go through and show you why I came to that conclusion by pointing out these differences between the June and July press release. Now, just a little bit of background information for those of you who are not familiar with it. But the Federal Reserve, the FOMC, is one of the most important economic organizations in the entire world. They meet every month or so, and they look at the U.S. economy, they kind of do some analysis, and then they issue a press release with what they think the road ahead looks like. So specifically, the FOMC in the U.S. is in charge of the money supply. So when you think of the FOMC, you should mainly think of inflation and interest rates because that's a lot of what they do. Also, they indirectly influence unemployment. So we're going to talk about all of it. Let's go ahead and jump in. What I will do is I'm going to put both press releases side by side and highlight the differences so that you can see how things are changing. So let's go ahead and jump into July. Recent indicators suggest that economic activity has continued to expand at a solid pace. You'll see the exact same thing in June. Now, one thing I do want to point out is that the FOMC very much follows a cookie cutter format. All of these are basically the same. So economic analysts really go through and scrutinize every single word, changing from warm to hot, right? Changing from cool to cooling, right? Small changes in words are what these analysts are looking for. So a lot of the stuff is going to be the same, but the differences is what we need to pay attention to. So notice job gains have moderated and the unemployment rate has moved up, but remains low. Let's go back to June. Job gains have remained strong and the unemployment rate has remained low. So in June, job gains were strong, unemployment was low. Moving forward to July, job gains have moderated, right? They're kind of not off the cliff, but they're not as strong as they were, and unemployment has moved up, right? We're not in a depression, we're not in a recession, but you can tell here we're not going in the same direction that we were in June. So moving on, inflation has eased over the past year, but remains somewhat elevated. In recent months, there has been some further progress toward the committee's 2% inflation objective. Let's go back to June. Inflation has eased over the past year, but remains elevated. So in June, we were just straight up elevated, right? Now we're just somewhat elevated, right? So again, small addition of a single word, elevated versus somewhat elevated, right? So they're saying, hey, inflation, it's still there, but it's not as big of a deal as it was. In June, we had modest further progress towards the 2% inflation objective, and in July, we have some further progress. Now, some versus modest, I don't know that there's a huge difference there, but it is a difference worth noting. So moving on to paragraph 2, the committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. So that's something that is known as the Federal Reserve dual mandate. That is a dual goal that they've had basically forever. So this balance between inflation and unemployment. So that specific objective is going to be the same in both press releases. However, what you will notice is that in the July press release, it says the economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. Let's go back to June. The committee remains attentive to inflation risks. So it's always had this dual mandate, right? It's always tasked with having this balance between inflation and unemployment. But in June, they didn't even mention unemployment, right? They said, hey, we are attentive to inflation. That's where we're focusing our attention. Now they're saying we are attentive to our dual mandate, right? So again, you see, they're not saying unemployment is the most important thing right now, but it's starting to come back into the picture. Now, the last 2 paragraphs really, as far as I can tell, are basically the same. Like I said, it follows a cookie cutter, so they didn't really change the interest rate. They always said, hey, we're going to be aware of evolving risks and respond accordingly in the economy, right? So that's all the same. The big differences here are job gains have moderated, unemployment has moved up, we're making more progress now on inflation, and we are returning to that focus of a dual mandate. So what does all of this actually mean for the economy? Well, the short answer is that the Federal Reserve did not change any actual economic policy in this announcement. The federal funds rate target is essentially the same. It didn't change. But what the Federal Reserve did do was express a change in sentiment. And in my opinion, that change in sentiment is a precursor to change in policy. You have to think about it from the perspective of the Federal Reserve. They want things to seem like they are on a smooth path, like they are in control of things. So they don't want to just have high interest rates and then the next day, boom, we're dropping interest rates. They want a gradual transition. And I think we are really seeing them lay the groundwork for that transition in this press release, right? Because the past couple months or years at this point, it's been fight inflation, keep the interest rates high. Now, they're not changing the interest rates, but they're saying, look, we've made some progress on inflation. Maybe it doesn't need to be the only thing that we're focusing on. Maybe we need to start focusing on unemployment, these other indicators in the economy. So, like I said, this is all my speculation, but I really do think that this press release shows that we are on a path towards lower interest rates. When will that happen? I have no idea, but I do think it's in the future. And this press release aligns with a video that I made several months ago in which I looked back at historic interest rates, or maybe it was federal funds rate. I don't remember because it was several months ago, but basically what I showed you is that every time we hit a plateau, right? So we have been at this current federal funds rate for several months now. Every time we hit a plateau, it is very rare for us to do another raise. Typically, what happens after we hit a plateau, we go down. We get lower interest rates, right? When we're going up, yeah, we can go up and up and up, but once we level off, we typically go down as opposed to going back up, and I definitely see that in this press release because the FOMC is really focusing on this dual mandate now as opposed to just inflation. So, like I said, this is my complete speculation. Do not make any kind of economic decisions based on my ramblings. After all, I am just a part-time economist sharing my thoughts with you here, but I hope that you did enjoy watching the video. I hope you got something out of it, and as always, if you do have any comments, be sure to leave them down below. I'll see you next time.